I want to discuss market structure, about market structure. What you need to know about market structure, okay? Because the most important thing is in trading is how to analyze and deal with the market. If you can analyze the market, believe me, trading will become easy for you. It doesn't matter any platform you are trading on. It can be forex, it can be binary, it can be stock market. So once you are able to analyze the market structure perfectly, it will be easier for you to trade. So something about us, about we traders, is that we are not able to analyze all the market structure. That is why we keep on losing trades, and we don't understand why we lost the trade. Okay, so today I want to discuss only on market structure, so that whenever you took a trade, you should know the market type of market structure. Like you should know the market structure you are trading with. Okay, you should know the market structure you are trading with, and we have the three types of market structure. Okay, so I'm going to explain everything for us today. So yesterday we were talking about um, we were talking about sniper trading concepts, introduction to sniper trading concepts. So I talk a lot about sniper trading concept, how the institutional trader enter the market, how they hunt, what they do before they enter the market. They don't just enter the market blindly. They know exactly where they enter the market. So that is why they always have these sniper entries. So today I want to show you guys how to analyze the market structure. How to analyze the market structure. Because after you have known how the institutional trader study and manipulate the market structure or the market itself or manipulate the price movement, you also have to know how they analyze the structure. What did they see before they start buying? What did they see before they start selling? So that is what I want to explain us today. And it's not something that's going to take up our time. It can maybe we might just spend like 1 hour or 14 minutes or something like that. So it's just market structure. Tomorrow is the major thing. Tomorrow we're going to discuss about supply and demand, support and resistance, the structure, institutional structure, like the way the institutional used to draw they used to map up their charts before they enter the trade. Then we still going to discuss about the QML and so many things that you need to know. That is what we're going to do tomorrow. So today is just very simple market structure. So I don't think it's going to waste much of our time. Market structure, market structure. So whenever you took a trade, the first thing that should come to your mind is how do you identify the structure of the market? Okay, how do you identify the structure of the market? That is the most important thing. Once you can identify the structure of the market, okay, this is the high, this is the low, this is support, this is resistance, this is the price movement. Market is not trending, market is not ranging. Once you're able to know all this, it will be easier for you to predict what the next market direction. Okay, it will be easier for you to predict next market direction. Now, so what is market structure? The question is, what is market structure? Market structure is a trend following tool that traders read and follow based on how the price move from bullish to bearish or from bearish to bullish. Okay, they are trend following tools. Trend following tool. Trend following. Like if the market structure is moving upward, excuse me, let me bring out my drawing tool. So tomorrow class we might just spend up to 2 hours or more than, or even let's say 1 hour, 1.5 hours. But today is just very simple topic, market structure, how to identify the market structure. So it's not something that will take much of our time. So today's class, I'm not going to take much of our time. I know some of you are busy. I know some of you are busy, so just willingly to attend today's class. So that's why I'm not going to waste much of our time. It can be up to 30 minutes, we are done. So when I'm talking about market structure, I'm talking about the trend following tool that traders read and follow. Okay, the traders read and follow. That means it is very important thing, one of the most important things as a trader, you must know how to read the market structure and you must know how to follow, when to enter, when to exit. You must know how to read the market structure. Now take a look at this trade. I think some of you who are in the forest signal group, you might have saw that we took this trade last week, but we didn't we took this trade last week, but we didn't hold the trade too long because what happened? The market is consolidating, and this is where we are stuck. Where the market is consolidating here, this is the area the market is consolidating. It doesn't give us a good entry, good trade. Okay, I think we saw this trade. The market is moving down. Market start consolidating here, and a break against the consolidating. So I asked us to close the trade in profit. So we closed the trade in profit. But you see that on that same Friday, last week Friday, you see what happened next. The market start dropping drastically. It dropped. So which means this is another level where we should now look for a buy opportunity. Don't worry about that. We look for a buy opportunity on that level. But that is not what I'm going on to this. That's not what I want to discuss today. I just want to discuss about market structure. Market structure. Now, for me to just open the chart and analyze the structure of the market, and for me to get the structure of the market that okay, this is the next direction where the market is heading to. I think that is exactly what you guys want to learn from me. And don't worry, I'm going to help you with that. So, but first thing, this type of structure I'm showing you right now. They are what we call the structure. Institutional structure. The way the institution see the market, analyze the market, and trade the market. Okay, so this is what we call the institutional structure. The structure they always use. There are so many of this structure, but one thing first, before you can understand their structure, you must first understand the normal market structure. You must first understand the normal market structure. So that is exactly what we are going to discuss. Like I said, we are not going to waste much of our time. So at least 30 minutes we are done. Now, it's very most important thing that as a trader, you must try to read, or you must read and able to interpret the market structure. If you can't read or interpret the market structure, you have to stay away from that type of market, or you don't have to trade the market at all. So choose any other market structure which you can easily read and interpret. Okay, so for you to be trading and not able to interpret the market structure is just a waste of time. So what you have to do is you must know how to read. As a trader, you must know how to read and interpret all market structure. It's very easy. Learn how to read and interpret all market structure. So now, um, they are the swing high and swing lows. They support as the supply and demand zone, and support and resistance area. These are the market structure that we always use. There's nothing else. We don't use any other thing. What we always see is, whenever you're analyzing the market structure, what you should always find out is the swing high and the swing low, or the support and resistance, or supply and demand. Okay, because this is the most important thing as a trader that you must do. Analyze the market structure and able to read and understand. You must able to read and understand. Market cannot just all the time form a good structure that you're able to read it easily. If the market is moving up like this, we know this is uptrend. Or if the market is moving down like this, we know this is downtrend. Or if the market is moving sideways like this, this is ranging market. Okay, but if the market is trying to move something like this, this is how the market moves move all the time. You can't easily identify which structure are you trading on. Is this uptrend? Is this downtrend? Is it sideways? Okay, so you might be struggling to understand the type of market you want to trade on. But if you find it difficult to really understand the type of market you are trading on, you should be away that type of market. Always choose the market that you can easily understand, read, and understand the structure before you enter the trade. That once you open the chart, you can easily identify that structure you are trading on. So, and this structure is based on the price movement. Like, they are the swing highs and swing low. They are also the support and resistance area, and also supply and demand zone. These are the most important levels, or the most important part that trader need to know, that this is where I should enter my trade. Should I enter the trade at the high, or should I enter the trade at the low? Or maybe at the support, or maybe at the resistance, or maybe at the supply, or maybe at the demand. So it is very much important that once you can identify the structure of the market, that is where you should enter the market. So now let's go right to the what next. Okay. So let's say now this is a downtrend, right? This is a downtrend. We have three type of market structure. We have the downtrend structure, we have the uptrend, we have the sideways. But today I'm going to discuss about two: the downtrend and the uptrend. Okay, sideways is very common, so we don't like to use sideways during a trading market. Like I said, I don't agree when people say sideways market is a trending market. When we are talking about trend, we are talking about a strong move. Okay, we are talking about a strong move. That strong move can either be up or down, not sideways. Strong move cannot be on sideways. So that's why I don't 100% agree with people that say that we have three types of trend. We have the uptrend, we have the downtrend, and we have the sideways trend. I don't accept that. When we are talking about trend, we are talking about the strong move. That strong move can be up or down, not sideways. So that is why I don't agree with them. So that is why I want to explain to us the two type of trend that we have: the uptrend and the downtrend. Now, this is an example of a downtrend. Okay, this is an example of a downtrend. When the market starts resuming in a downtrend, what does it first create here? It first creates what we call the high and low. First, it will create the high and low. Then it starts creating the lower highs, lower low, lower highs, lower low, lower highs, lower low. So this is the first creation of the downtrend. This is the beginning. This is this is kind of bullish power, bullish trend. But this is clearly seen as a downtrend movement, because here we have the high and here we have the low. A lot of people, when they see this type of market, they will start counting from here: higher high. This is not higher. This is not lower high. Okay, because for me, I can say this is still higher high. This is still higher high, because the previous trend is up. Okay, the previous trend is up, which is this is high, higher high, higher low. Okay, that is how to identify the structure of the market: higher high, higher low. This one higher high, higher low. So this too also is higher high. But when the market starts resuming in a downside, we call it's no more called the higher high. So now we call it the high. We call it the high, and this is the low. See my trend line, the channel I draw, just to modify or just to clarify that this is likely or this is definitely a downtrend move. Okay, so this is the high. The market, before market starts or resume in a downtrend or uptrend, what the market always do is either it create the high and create the low. It's going to first create the high and low. So the next, any other move apart from that is what we determine if the market is going to move in a downtrend or if the market is going to move in an uptrend. So here, the first thing the market did is to create the high and they create the low. So we cannot say higher high, higher low. Just wait for the market to create the next high and wait for the market to create the next low. Once the price market create the next high and create the next low, then you cannot say this is now your lower high structure and this is now lower low structure. This is not lower high. Don't take it as lower high. The market is high because the first move to the downside, the first thing that market always do is to create the high. Same thing goes to the upward move. If the market first create the first move are called the highs and low. Okay, so any other move apart from it is what we call the lower highs and lower low, or higher highs and higher low. But here I'm seeing only the lower highs and lower low. This is downtrend structure. Okay, so lower highs and lower low. So this is high, this is low, this is lower high, lower low, lower high, lower low, lower high. Here there is no lower low because the market didn't bounce off from this level. You only see that the market is bouncing up from this lower level. That is why we call it the lower low. Same thing goes to when the price comes to the upper side, it always bounce down to the downside. So when you are trading, you only consider the way the market moves. Okay, because when you trade and you didn't analyze the whole chart movement, and you thought the market is going to resume to the upside. For instance, you are trading and you draw a supply zone here. Okay, you draw a supply zone, you draw your resistance zone, and you waited for hours upon hours just to see the market will rise to this point, then drop. Well, I'm saying that this you are trying to implement the institutional structure, market structure, but this is not how it's going to work out. So the overall trend is down. So likewise, you have to analyze the market according to the downtrend. Okay, so that is why we have this support here. We have this support. So that same support now become a resistance. Okay, support here become resistance, and also become a resistance. So that means that okay, there's a resistance here, and this is also another resistance trend line. So the market meet up and join together by creating the next lower low structure. Okay, so this is a resistance level, and the market touch this also this level, and it starts moving to the downside. Now, you might be expecting the price to go a little more down. Okay, you are expecting the price to go a little more down, but you should analyze where are the next low. Either you call it next low or you call it next support. Okay, where are the next support? Because market bounce off from these levels. Okay, in the past, market bounce off from this level. Definitely, if the market come back to that same level in the future, it should bounce back the same way it happened to the previous one. So here we have the support. Okay, so now as the market touch the level, it bounce back to the upside. Okay, so we are still having some kind of uh, a downtrend move. Okay, now Let's take a look what happened to the next move. As the market is moving down, we also had our support here. Okay, we have support, we have resistance. So here also we have the resistance. Look at the resistance. All our hope is to expect the price to rise to that resistance and drop. Same thing here, expect the price to rise to the resistance and drop. Same thing here, it happened. Okay, and here also we are still expecting the price to rise to the resistance and drop. But do you see what happened next? That is not how the market moves. Market move according to the trend. So here we have the resistance, or we have the supply zone. Watch out. We have the supply zone here. Why is it that the market didn't reach the supply zone before you start moving to the downside? Why? The question to ask yourself and to answer it for yourself. Why? Because here we have this level resistance, and here we have the break of structure. Here also we have the supply demand. So why are we expecting the market to reach this supply before we enter the trade? Because we believe that this is where the institutional trader will ride in the trend. But we are really not wrong. We retail traders are wrong. Okay? Unless you analyze the whole chart by identify the structure you are trading on. So here we can say we identify the structure we are trading on, and the structure we are trading on is a downtrend. So which means the market must have to reverse from this trend line. Okay, market must have to reverse from this trend line. So that is why the market keep going down. Okay, see that very strong after market create a double top, you see a strong selling pressure to the downside. I think I remember this pressure. I remember this pressure. So that's about downtrend. This is an uptrend like either. So here we have the first thing the market will do is create the low and also create the high. The next move is to create the higher low. If the market bounce from the low, the previous level low to the upside, we call it the higher low structure. If the market bounce down from the previous high, we call it the higher high structure. Higher low, higher high. Okay, here no higher low, but the market again created another higher high and bounced down. Here it's trying to create higher low structure, but only few buyers enter the market. The market drop drastically to the downside. So here we also have this higher low structure. This is an uptrend structure. Okay, this is an uptrend structure. So when you're analyzing the chart, you must try to find out where is the first high and where is the first low. So, like for instance, I want to draw a support or resistance. I must just first think of how the first high was created and the first low was created. Now, if I see the second highs and low, then I will now connect my trend line. This is the first high, this is the first low. Okay, then the first thing I saw the low created, then again I saw another low created. Wow, I'll first draw my trend line, and again I saw another high created, then I will draw my trend line. So which means once the price again come back to that same level, we enter the trade. Same thing here, once the price again come back to that same level, we enter the trade. But see what happened, we have so many consolidation around this level. This is what we call the breakout build up. So many build up around this level. That is why the market break the level. Okay, so very simple analysis. Okay, now let's go to the charts and let's try to check some of the things that we need to know about market structure. Okay, so I'm going to show you some of the trade I will do. Um, look at let's start with AUDCHF. AUDCHF move according to the trend to the price movement that we predicted, but we didn't we didn't hold the trade for so long. I think because we don't want to lose the trade, and the market was able to capture about 100, let me say almost 160 pips. Okay, the market was able to capture almost 160 pips. Now, let me tell you the reason why I took a sell trade here. You might be wondering, why did I even think of selling the trade around this area? Why? Did I not wait for the price to go up again? Well, your question is very simple. Then I'm ready to answer it. If you look at the market structure, the market is in a downtrend, right? The market is in a downtrend. I've already analyzed this. I saw the market is in a downtrend in 4 hours time frame. So there's no need for me to draw it. That is why I didn't share the analysis on the signal group. So on 4 hours time frame, the market is in a downtrend. Then I saw the way the market is reacting around this level. Here we only see candle close above the line. This is a downtrend, right? So the first thing that the market first created is the high, and it created the low. Okay, no need to draw a trend line yet. Then again, the market rise again, created the low. Once the price created the low, then I will draw the trend line. Okay, the first low and the second low. Once the price created the two lows, I'll draw a trend line. Then the market went up again to create the second high. Then I draw another trend line. I saw that the market is now moving in a channel. So now what are we going to do is, if the market reach any of these points, that is when we're going to sell. If the market, now this is the second high, right? So that means if the market come back to that same high, we sell again. This is the second low, right? That means if the market come to this to the low again, we're going to buy again. So it depends. Now, when the price reached this level, there was no sign of buyers. Buyers supposed to enter, there was no sign of buyers. Then I now use the institutional structure to analyze the chart on 1 minute or 1 hour chart. 4 hours chart, only analyze the trend, where the trend is heading to. Then I switched back to 1 hour. I switched back to 1 hour. On 1 hour, I was checking the chart. I was checking the chart that here we have a downtrend, right? Here we have break of structure, and above it we have some sellers supply zone. If you remember, those of you in the group, we took the sell trade, we lost because the market came back again to its stop loss. But the second time we took, we won the trade. Okay, so this is the first supply zone. This is the first supply zone that we thought the price is going to reverse from this zone. Already it only reversed for some time, but it continued to the upside. Then I now look again, where is the next supply zone? But actually, this type of supply zone is not new. This is not a fresh supply zone. Then I look again, I saw next supply zone, which is right here, but it's used here, so it's not the fresh supply zone. Then I draw a zone already. So now, when I saw the price again touch the zone, then I decided that, okay, guys, this is the time to start selling AUDCHF, and we're going to recover our loss on AUDCHF. Okay, so we did recover the loss on AUDCHF. We recovered the loss on AUDCHF. So we saw the market is moving down in the direction we predicted. Then we saw the way the market is moving. Now we have this kind of movement. I asked member of the group, let us close the trade so as to avoid big losses. Because this type of movement, as the market has created this double bottom neckline, and the buyers might have test the level, they might still continue the market again, hit and stop loss and drop. That is why I asked them, let us close the trade. But the whole trend is still down. Okay, thanks to the market that's still moving downward. So the whole trend is still down. Then I saw the market is trying to create a pattern that will make me to worried about when we should enter the trade, and this is the pattern. Okay, so I saw that the market create a support level right here, create another support level right here. So the first one and the second one, then I drew a trend line. The third one is creating. So I told the member of the group, let us trade once the price break the third, the trend line the third time. So we did not sell immediately. We waited for some hours until when the price break the trend line, we start selling the market. So I think we set the market for some time. We didn't set the market to reach the target. I think so. So that is when we finally won the trade. I think we closed the trade for some hours. We didn't allow the trade to reach the major target. So now the next one that we also miss is the AUD NZD. AUD NZD is also a perfect trade. We took the trade according to what I saw. Okay, now let's go to 4 hours chart. Remember, those of you in the group, this analysis was based on 4 hours chart. I said something about this analysis, about this trade. I told everyone that okay, this trade is 4 hours chart, but we are not going to trade on 4 hours chart just to avoid big stop loss. So we're going to switch to lower time frame, maybe 1 hour or 30 minutes or 15 minutes to enter the trade and look where we can easily place our stop loss to avoid big stop loss. So we use a tight stop loss, not a big stop loss. So we saw the first move when the price hit the level, the market is moving down. A lot of people might have been confused. Will the market still go up? But I still believe that the market is going to create something like this. So the market start moving up and created the second top. Then I told them, if I see any confirmation, if I see a red candle that confirm that this level is still holding, then we'll sell the trade right away. Okay, but if you look at the whole market structure, the market is still what? It's still down. Okay, there's no need for you to be saying that you have a perfect trend line structure. Okay, if you look at it very well, the market break the structure, right? A lot of people might still be buying, thinking the price will go down, but the market break the structure. But never mind, that is not where we are dealing with. That is not what we are dealing with. But remember how we're going to deal with the market. Identify the structure and trade on it. So if you identify the structure that this is how the structure of the market look like, that the market is still an uptrend after breaking the level, try to remember all these levels. Levels is very much important. When you are trading, always remember support and resistance. If you draw a structure of the market perfectly, remember the support, remember the resistance, remember the supply, remember the demand. Okay, I will show you a trade that when what most people think. I saw some people buying the trade, but in our group we sell the trade and we make a good profit out of the trade. Okay, I think that was the best trade that we took last week. Okay, so I'm going to show you, but this one is quite different. A lot of people might be buying this trade, but I don't think of buying this trade. Why? Because when I did another analysis, I was able to confirm that we still have some kind of levels right here. If I connect this high to this high, it's going to connect the third one, which is something like this. Okay, so then I think and I look at it that this is not this is not an bullish a bullish trend right either. This is not a bullish trend. This is still a bearish trend. If this is going to be a bullish trend, there should be no obstacle or barrier that will stop the price from going down. This is still a bearish trend. Then when I saw the market, when we connected the trend line here, here, and here, I know the market will drop. Then I now go to lower time frame, like I always do. I did the analysis like this, though I did not draw the channel. I did not draw the channel. If you remember, I did not draw any channel like this. But this is was my first analysis. Okay. Then I have already know if I should draw the channel that is how it's going to look like. Then I now go to 4 hours now. I check the 4 hours chart. I told them that okay, This is how the four chart look like, and this is the trade we're gonna sell. So we took a sell trade on this trade, but we jump out of the trade because the market is kind of taking days to move strongly. I think because of the NFP, the market is really waiting for the NFP to come up before they start moving. You observe that throughout the week, there's no strong movement in the market. It was only the NFP day. So all the pair, they are really waiting for NFP to resume before they start moving. Okay. So I asked them, let us close this trade. This trade is being taking long. For 2 days, it hasn't moving. It has not moved even up to 10 pips. So let us close the trade. So we decided to close the trade. But unfortunately, on Friday, the market dropped drastically. Okay, we didn't lost this trade. We closed the trade in profit. So that is the first trade that we took. That is another trade that we took. Also, like this GBP CHF. GBP CHF also we took a sell trade. Uh, what where did we took a sell trade? Yes, I think somewhere around here. Yes, somewhere around here. If you remember, we took a sell trade somewhere around here. Okay, a lot of people might think this is a reversal pattern, right? Yes, you are correct. It looks like a reversal pattern, like inverse head and shoulder pattern. If you switch to, because it doesn't look like head and shoulder pattern correctly here, but if you switch to 1 hour, it looks like head and shoulder pattern. Okay, so a lot of people might be say, let us buy this to this is a buying trade. Wow, I saw so many people buying the trade. They are buying the trade, they are buying the trade. But that is not what I'm doing. A lot of people buy the trade and I do sell the trade. How did I even analyze and how did I come up with the same analysis I did on ADCHF? I also did here. Okay, you remember my analysis is always all the time always the same. So I didn't analyze here on 1 hour because I didn't get enough information. I switched to 30 minutes. So on 30 minutes chart, what I can see is I saw break of structure. Then I take this level as our next supply zone. If this is break of structure, this level should be our next supply zone. Remember, we took this trade, we lost. Though we took the trade, the market started moving down, but fortunately, buyers still entered. Buyers entered by breaking the structure, the structure high, manipulating. That is what we call manipulation of the high. Instead of breaking and continue, you just break and reverse to the downside. Because many traders also bought this trade because of the pattern. That is why the buyers still keep pushing the price higher. They break the level and the market still drop. After breaking the level, no enough buyers to buy again. So the market starts moving to the downside. Now, as the market moved to the downside, so we now saw that this is a. So I now told everyone in the group, we are selling this trade, we are not buying. We lost the trade and we're going to recover the trade because our analysis is correct. It's just that the market is doing what it's supposed to do. Maybe by the time we're supposed to sell, a lot of traders are buying that time. So thousands, millions of, let's say, out of traders who are trading the forex market, millions of traders are buying, while thousands of traders are even thinking of selling. So that millions of traders who are buying won the trade, and that is when we have this manipulation of the high. So, but immediately they stop buying. The sellers who are selling the trade took the trade, took a sell trade, and the market start moving to the downside. They immediately took a sell trade. So I told them, everyone, we're going to sell this trade. Don't worry, we're going to sell this trade. So we sold the trade and we keep the trade running. And finally, the market hits our take profit level. It hit our take profit almost, is it 150 something pips or more than that, or even more. So we keep the trade running. We took a set trade. We keep the trade running. The trade keep running and hit our take profit. So that is how we gain an upper hand on this trade. So very simple. I think also let me show you one of the trade that we took on Friday on Euro AUD. I think we lost the trade twice. We lost the trade twice just because of the news. The news is causing the market to move the way it's like. This is it. Okay. The market is moving up. I know that. The market is moving up. But I thought the uptrend should end. Immediately the market hit a supply zone. But it didn't end. It keep on moving up, moving up, moving up. So here, I think we took a sell trade here and the market moved a little wide and still continue. That is why we lost the trade. So we lost this trade because the market is still bullish. Even the first time we took the trade, because we lost the trade twice. Even the first time we took the trade, those of you who took the trade, you find out that the market is going to a direction, almost it the take profit, and without hitting the take profit, it just reversed to the upside very strongly and continuing upward. I kept checking the news. I see that the news only favor dollar. Okay, and if dollar is positive, this currency also must be positive. Euro AUD. Okay, Euro AUD must be positive. Euro USD must be negative. If dollar is positive, I check the news. The first news that happened by the first news on NFP that happened is positive. Is positive for the dollar. It helped the dollar to rise. That is why also it's rising at that moment. The first time we took the trade, we lost. Then again, I check again. After the news, after NFP news, there's still a news of PMI. Is it PMI, something like that, or CPI? So the news also still help the dollar. Okay, it helped the dollar to rise. Also, this currency also is still rising. That is why we lost this trade. Because the dollar is strengthening. Same to this currency also is strengthening. That is why we lost this trade. So the news caused us to lose the trade. Even when the market is going to a direction for a while, when the news started immediately, the market changed direction because of the positive news on dollar. So that is why we lost the trade. So don't worry about that. I think this week is going to be a perfect week, because there's no news that will be disturbing us. So that is why me to say I don't like trading on news. I like trading when the market is quiet. When the market is quiet, everything is moving smoothly. But when the news come up, the news will change everything. There might be a spike that hit a stop loss. There might be change in direction. So anything can happen. So that's why I hate trading during this period. So I thought we're gonna murder NFP, but NFP did murder us. So we lost the trade. We lost the trade on Friday. But we took a trade on Euro JPY. We won the trade on Euro JPY. We won the trade. Euro GBP also, we took a trade on Euro GBP. We won the trade. I said I'm going to show you the video about the analysis, because I asked everyone to show me your analysis about Euro GBP. Don't worry, tomorrow morning I'm going to share the video. I still have the video. Okay, so Euro GBP, we won the trade. Euro JPY, we won the trade. I think this was the only trade that we lost on Friday. This is the analysis I did on Euro JPY before the news changed direction. If the dollar is strengthening, Euro JPY will be down. Because Euro JPY, Euro USD, AUD USD, NZD USD, what again? AUD JPY. These are the currency that move the same. That means if the dollar is positive, all this currency will be negative. Euro AUD, Euro JPY, AUD USD, AUD JPY, um, what else again? GBP USD at times. GBP USD, GBP CHF, NZD CHF, NZD USD, NZD JPY. These are currencies that move against dollar. If dollar is positive, they move negative. If dollar is negative, they move positive. So the first time we took the trade on Euro JPY, was around here, was around this level. And what did I see around this level? I saw a Quasimodo pattern. Quasimodo pattern. You check very well. This is a Quasimodo pattern. So we have the low and we have the lower low. Okay. We have the low and we have the lower low. The market move up. Then I saw the market reach the level and we decided to buy the trade. So we did bought the trade and the market did at a profit level. Euro GP also is also the reason why we won the trade on Euro GBP. Is it Euro GBP or Euro AUD? Euro AUD also is a Quasimodo pattern, but because of the news, the market changed direction. I think the Quasimodo pattern was somewhere. Where is the devil? Where is the trade? Where is the trade? Yes, the Quasimodo pattern was somewhere around here, somewhere here. So we took a sell trade. See the market move down a little bit and start moving up. Hit our stop loss and keep moving up higher. So that is why we lost the trade. So in trading, loss are very common. So this is the only currency that we lost on Friday. Others is the winning trade. So okay, tomorrow I'm going to discuss about support and resistance, supply and demand, Quasimodo pattern, the, some of the break construction, some of all these institutional structure, market structure, the way they see the market and analyze it, and when they enter the trade. So I'm going to explain to us today, tomorrow. So today is just the market structure. Once you have the foundation of this uh, market structure, you should be able to analyze also the institutional market structure. So you should be able to know how to analyze both of them. So this is the foundation of it. Once you can identify this is an uptrend, this is a downtrend, then that also will be easier for you to analyze as well. So I think I should call it a day. Like I said, I'm not going to waste much of our time. So maybe I should call it a day. Or if you have any question, you can ask now. Okay, I'm still compiling some of the previous um, section, the class they had, the videos. I'm still compiling it, so don't worry. Tomorrow, if you don't get it today, tonight, you can get it tomorrow. I promise, you can get it tomorrow. So I'm still compiling it. I try to check everything, but most of them are not complete. So I'm compiling those one that are on the cloud. I store them on the cloud on the Google Drive, and those of some of them I store on my hard drive. So I'm trying to compile everything together. Then I will share it with the group. So those of you who are not never seen the video before, never attend the classes, or maybe you are just new to the group and you have never attended anyone before, you can watch the video, know some things, and that is it. So
Hello, sir.
yes,
Yes, I want to ask a question. I know it's a little bit you mentioned, but
okay,
this supply and demand zones,
okay,
I discovered when you trade it,
okay.
your take profit extend far beyond the low of the candle of the structure where you took the supply and demand zone from. So I don't know if you can explain how you know that is the take profit or
Well,
as in because for
if
me
I
to
like,
understand it, I was thinking a little bit more.
what I usually do is that, like, let's take for example on ADC check. On ADC check, the reason why I took this level as our target level, I will always switch to higher time frame. If I didn't see it on higher time frame, if I didn't see it for 1 hour, I'll go to daily time frame. That is the reason why I draw this line. Look at this single line. I check on daily time frame, I saw the low from this level. Definitely, if the market come to that level, you should visit the level. I saw the market reverse multiple times. So that is why I think, okay, this should be a good level to take our profit. But it seems the market still going down, still going down. And it seems that the price keep going down. And the reason why I took this level again as the support level, as the take profit level, is because if you check very well, you see that on the same level, we still have a strong reversals on the same level. We have a demand here. I check on daily time frame, we have a demand zone here. We have a support, we have a support, we have a support here. So that means that is the level the market might likely to stop and continue or reverse. So that's why I took this level as a. If you observe the trade that we took on GPCHF, once the market is at stop take profit, the price decided to go up. If you check, the market structure changed immediately because that is a strong reversal level. This is the candle, and this is the candle that hits the take profit level. This red candle. It's because this is exactly the point I draw the take profit level, and this is the candle that hit the take profit. You see that immediately market touched the take profit level, the market reversed. It came back again, it reversed, but this time it failed to reverse. So the market, that is why anytime before I draw any support or resistance or take profit level, I will go to higher time frame and check where the market might possible to reverse. So I will check either 4 hours chart or daily chart. So I check here, I saw we have the resistance level here, we have resistance level. This is daily chart, resistance, resistance. So which means if the market decided to come to that level, it might still create a support. So that is why I said, okay, that should be our take profit level. Well, some of you might just think of closing the trade too early. Fine, it is good that way because if you don't want to keep the trade running for days, for 2 days, 3 days, you can close the trade for that day, that same day, once you make a good profit. So, but if you really think that market will go to the direction we have predicted, then you can hold the trade. And that is why you keep holding this trade until the market hit the take profit level. I think it took up to 2 days, almost going to 3 days. So it depends on how the market is so slow. So before I don't just took a random level for take profit level. Even the stop loss, I don't choose a random level for stop loss. My stop loss is always above the high. That is why the trade that we took on AUDNZD, the trade that we took on AUDNZD, remember I said something about the trade when the market is moving down. I said you can't enter a sell trade here because this is the actual level the market is at that moment. I said we can't enter a sell trade here because if you enter a sell trade here, your stop loss should be here. And look at the range from the entry to stop loss. So it's the big stop loss. So I asked us, okay, let us wait for correction. Once the price comes to the correction level, then we can decide to sell the trade. So the price did came back to the correction level, then our stop loss still above the zone, above the major zone. Okay, you can make your stop loss to be above this zone, but market most of the time they consolidate near the previous high. So that is why I make this level as the major, as the stop loss level. And if you check, it's above the supply zone. So you can see that it's above the supply zone. That is why I make the level, because in case the market escape this level, there might be some level that might stop the market to go and hit a stop loss. So whenever I trade, set a stop loss and a take profit level, I always check for zone, okay, because market do reverse on supply and demand zone. If I set a target, my next target will be on the demand zone or a supply zone. On my stop loss will easily be above the supply zone or below the demand zone a little bit. Okay, so that is how I do trade. So the way you respect your entry is the same way you respect your take profit level or your stop loss. So don't just set stop loss a little high. Set your stop loss above structure according to the market structure, the way you analyze it. So that is it. I hope I answered your question. So, in the absence of question, let us call it a day. Tomorrow, we're going to discuss about supply and demand, support and resistance, and institutional trading setup, the one that we usually use in the group, when to enter the trade, when to not to enter the trade. So we're going to discuss about order block, Quasimodo pattern, the compression, and so many other things. So that's what we're going to discuss tomorrow. So tonight. So okay. Good night, everyone. See you guys tomorrow. Have a nice
Yeah, good
day.
night, sir. Thank you, sir.
Bye bye.
Thank you, sir.
Then about those of you who want, those of you are new to the group and you are now in the Signal group, well, I will only recommend you if you want to start using the Signal. I will recommend you to start with $50. Don't start less than that. So we start with $50, be using the 0.05 lot size or 0.03 lot size. So don't use more than that. So don't, and again, I'm not advising anyone to go and deposit 100 $1,000 to start using this. $50 is enough. Just find a $50, then trade on your account. Don't deposit 200 just for you to say you want to recover your losses. No, it's not possible. Deposit the little amount you have from $50 upward, then start trading with it. Don't deposit less than that. Don't use $10. So $10 is not easy to do. So okay. Okay, see you guys tomorrow. Happy Sunday. Good night. Bye bye.